Hi guys, how are you all doing? I hope you guys have been killing the market. Welcome to another video. This video is a follow-up to the Outlook video that I released 2 weeks ago. And now that the market has completely played out according to the forecast, I've decided to come here to show you all the setups that I took in line with the forecast. So without wasting much of our time, let's jump right in. What I'm going to do is I'll take an extract from the Outlook video for each of the days, then I'll show you how the market played out and you'll see for yourself if it actually followed exactly what I expected it to do or if it played out the other way. Let's start with Monday. Coming up next is an extract from the Outlook video showing my prediction for Monday. I expect London to push price down to run these lows right here, like I said earlier, into New York Open, and then in New York Open I want to see a short-term bullishness to confirm to me that the market is about to continue its up move, or I go into the smaller time frame to see if I'll get one of my 5 ultimate price action reversal patterns so I can use it to enter the market to go bullish to clear this high right here. Now let's see if that is exactly what the market did. Monday is represented by the price action from this point to this point. So from the Outlook, I said I expect London session to push price downwards. Then towards the New York session, we expect to start going bullish. And that's exactly what the market did, as you can see right here. Now let me show you how I was able to take advantage of the setups and how I took the trades using the systems and methods that I've taught you on this channel. The first thing that happened was this downward push in London session. Let me zoom in so we can see clearly. So we had the push down in London session. Immediately this started coming down. The next thing I did was to look out for reversal pattern to see if there is any liquidity pool that I can use to enter my buy towards New York session. As you can see, we have this ABCD swing right here. At this point, ABCD swing to the upside, which makes this level a liquidity zone. So let's mark that. This becomes a liquidity zone which was taken out right here, and immediately this was taken out, we add a new ABCD swing to the upside, creating our second liquidity zone. And if you are familiar with the consecutive liquidity run reversal model, you definitely know on the run of this second liquidity is when I expect the market to start going up. If you don't understand what the pattern is, that means you are here to see our video on the reversal patterns that we use. So I'll advise you to watch that video right after this one so you understand all the patterns clearly. So I'll mark the second liquidity zone right here. So at the second liquidity run is where we expect price to reverse. The next thing to do now is to mark the minor EBITDA prices below this liquidity zone. We check the price of the liquidity zone, that is 1.0298, which means the next EBITDA price to that level is going to be 1.0285. That's the minor EBITDA price to the level 1.0285, which is right here. So I'm going to mark that with a box, 1.0285. I'll go into settings to adjust the numbers. So we have 1.0285, and the next EBITDA price to that will be 1.0250. 1.0285 to 1.0250 is going to be my trade zone. Inside this range is where I want to enter my buy trade. Price came into the zone right here. Immediately price entered the zone, I entered my trade with a 20 pip stop loss. So this is what my trade looked like. On this candle right here is where I entered right here, and I add my 20 pip stop. I got 1 to 3 risk reward ratio right there. That's my first take profit. The second position that I opened was the same entry, same stop loss, but the target in this case is my predetermined high, where I expect price to get to, which is this previous high right here. So I target this neckline right here for the second position, and that happened to give me 1 to 3.6 risk reward trade. My final position was similar, same entry, same stop loss, but the target was not set. I just hold on to the position until I get an opposing setup. So I'll definitely be showing you what I got out of this final position later on. That is my trading for Monday, and you see it, I was profitable on Monday. I got my first take profit and second take profit on Monday. Then the last position was held until Tuesday. Now let's go back to the Outlook video to see what the analysis was for Tuesday trading. If this happens today, at the end of the day, that means we would have successfully created an accumulation range, which we can mark just like this, from the high to the low. That's from the highest point of the day. On Tuesday, I'll expect price to come back to the lower part of the accumulation range, where I'll look for reversal pattern on the lower time frames to go long again, probably after a liquidity run inside Monday. Then I'll go long again to target this high. Like I said in the Outlook video, if the market played out as expected, which it did, I said we would have created an accumulation range on Monday, which will be the determinant of our Tuesday trade zone. So let's mark out that accumulation range right now. So the high of the accumulation range is right here, and the low is the low of Monday trading right there. And we expect price to run the accumulation range according to our analysis in the Outlook video. And like I said in the video, that we'll be taking our buy trade from the lower part of the accumulation range, which is right here. Price came into the lower part in Asian session and took off. So I missed this trade. I wouldn't have taken the trade anyways because there was no liquidity run, and I love to see liquidity run before taking my trade. This would have been a better opportunity to enter the buy trade, which I didn't take because it is against the overall direction of the market. I can't take a buy trade after the liquidity run has already happened. Let's continue with our analysis. Remember, my last position is still active. I think I held it up to this level before closing it, and the reason why I closed it is because this level happened to be a major EURUSD price on the futures market chart. I use the futures market chart and the Forex market chart to check my EURUSD prices. Price is different in both cases, and sometimes the market uses the futures EURUSD price and sometimes it uses the Forex EURUSD price. The two levels are always very close to each other, but not at the exact same level in price action. The chart showing at the lower right corner of the screen right now is the futures chart, and as you can see, this high right here touched the major EURUSD price, which it failed to touch it right here on the Forex chart. So that is why I use both charts for my reference. Because of that level that was touched, I was able to enter my sell trade right from here. Tuesday we'll see a retracement back to the lower part of the accumulation range, and then price will push back up to then run the liquidity zone, and we'll have our reversal probably from there. The reversal pattern confirmation that I used is what I call the overextension 3-vector pattern. I am here to teach it on the channel. Maybe when I have time, I'll create a video explaining how to spot it. That was what I used to catch this sell, and I took the sell because I knew Wednesday to Friday contract is going to be bearish because the institutions accumulated sell position from the previous week. So I knew this sell is definitely going to be a good one because we are already at the major EURUSD price, and also we had our consecutive liquidity run reversal model right here. So I was able to take the trade. Let's zoom in to see how I was able to enter my trade. Right at this high, we had the ABCD swing to the downside, which makes this a liquidity zone. You can see that the market is actually doing the same thing over and over again. At this high, after the run of this first liquidity, we had ABCD swing to the downside, creating a second liquidity zone. After the second liquidity zone was taken out and price hit our next major EBITDA price, I entered my sell position. I had my sell position at the EBITDA price. At the EBITDA price, I think 2 pips from the EBITDA price. Then my stop loss was 20 pips, like you know. So I had 20 pips stop loss. My first take profit was 1-to-3 risk reward ratio, which I got almost instantly. 1-to-3 risk reward ratio for the first take profit. And the second take profit was the middle point of the accumulation range. I'll explain why I targeted that point for my second take profit, because I was expecting a retracement. Anytime there is an overextension reversal pattern, I know it is always followed by a huge retracement. I knew the retracement was probably going to start from the lower portion of the accumulation range. That was why I targeted the middle of the accumulation range for my second take profit. This buy trade was a very good one. Was in line for me to take the buy trade, but I was so determined not to take the trade because it is against the institutional direction. Institutions are in sell at the moment, so I have no reason to take this buy trade, even though I know it's definitely going to be a good retracement. At that point, I already had my second take profit. Let's mark that, which was about 1 to 7.5 risk reward. And my final take profit was the next major EBITDA price. My final take profit was right here. So, and that was my trade for Tuesday trading. As you all know, Monday, Tuesday is an intra-week contract, which means this high becomes the next intra-week contract high, which is a liquidity point. Like I said in the Outlook video, that if price was able to run the accumulation range on Tuesday, the high that will be created will become our next intra-week contract liquidity, which means price will most likely come back to run that high. From the Outlook video, our prediction for Wednesday, Thursday, Friday is bearish. We are already expecting a bearish setup. I knew the next trade we have to take is sell, and I'm already in a sell position, which I have set to break even on the last position, as I have taken profit on the first 2 positions. I waited for this retracement to happen. So while the retracement was happening, I marked out the zone where I expect the retracement to end, which is the retest of this liquidity zone right here. You all should remember that in our reversal pattern videos, I explained the retest of this zone as our second opportunity. I said if you miss out on the final liquidity run, the second opportunity is the retest of these liquidity zones right here. So I expected price to retrace to that liquidity zone for me to get my next entries. That level is this one. Let me just extend this line. When price got to this level, I started looking out for reversal pattern. As you can see, there was no ABCD swing to the downside right here. There was no ABCD swing to the downside. So I waited for the next reversal pattern that I'll get, and that's what I got was this break of structure, which is the normal reversal. At this point, after this candle right here that broke this structure, the first one was short, so I didn't really consider that until this second long one. After this second long break of structure is when I knew, okay, it's time to enter the market. So how do we enter the market in a normal reversal pattern? We use the demand or supply zone that caused the break of structure. So in this case, this is the supply zone that caused the break of structure. Let me just mark that out. So that candle is the supply zone that caused the break of structure. So I look for the first minor EBITDA price in that zone. That will be my entry point. So let's just mark out the first minor EBITDA price in the zone. The closest minor EBITDA price to the supply zone is 1.415. That's 1.0415, and the next one to that is 1.0450. So this is the EBITDA zone. And as you all can see, I had my entry right here and my stops at the high right here. Let me put the short position right on the trade. So I had my entry at 1.0415, stop loss just above the eye right here, and my first take profit 1 to 3 risk reward ratio. You already know 1 to 3 risk reward ratio, first take profit. Second position, same entry, same stops, different targets. In this case, I targeted the run of this liquidity right here for the second position. This is the last liquidity point, so the run of that is what I targeted. That's the low of the accumulation range. That's my second position, and the third position I targeted the next major EBITDA price. That's the trade for Wednesday. The trade played out quite well. We had our entry on Wednesday, but on Wednesday we were not able to get our first take profit, but we got it right here on Thursday. And after first take profit was gotten right here on Thursday, we had our other positions moved to break even. After that, I waited for price to give me the next target, but fortunately for us, on Friday we got a new opportunity to enter again. As you can see, price came up right here in Asian session, gave us this equal high, which marks the first ABCD swing, and after that was taken out, we got another ABCD swing to the downside, which makes the second ABCD swing. And as you all know, that is the final entry point for us. And how do I enter this? I need to mark the next EBITDA price above the second liquidity zone. The second liquidity zone is 1.0390, which means the next minor EBITDA price will be 1.0400. 1.0400, and the next one to that will be 1.0415. This is where I expected to get my entry, but unfortunately price didn't give me that. Price took out the liquidity and rejected back into the zone. If you remember, like I said earlier, there is always a second opportunity to enter, which is the retest of these zones. First zone was tested right here, and that was where I entered my trade. That price right here. So I had my entry at that point right here, and stop loss was few pips, I think 5 or 3 pips above this high. That's my first position, and the first target, as you already know, is 1 to 3 risk reward ratio. Yeah, somewhere around here. And the second position, I targeted the original second position on my trade from Wednesday, which is the low of the accumulation range right here. Same target as this trade right here. That was my trade on Friday. And as you can see, on Friday close, we have gotten our first trade. As you can see, on Friday close, we got our first target right here, which is 1 to 3 risk reward, but we failed to get our second target, just like on the trade from Wednesday. So we had to hold the trade over the weekend, and as you can see, on Monday price went straight down to our second target on the 2 positions. That leaves us with our last position on all of the trades still running, and those positions are already at break even. And from my analysis for the following week, I saw that the institutions are already putting in some bullish orders, so I knew the price will most likely go back to run this previous high, like I said in the Outlook video. Once I started seeing buy accumulation around this sell delivery, I knew the price was going to come back to run this high. Although I didn't take the buy trade because it was against the original direction of the accumulation. This is just going to be like a major retracement, so I don't trade like that. I only take trades that are in line with the accumulation and distribution going on in the market. The buy trades that were placed here are just little compared to the overall accumulation and distribution in the markets. Price actually delivered that, went straight up to run that high. Price kept moving up, and yeah, it took out the high right here. After taking out this high, I was able to take my sell trade from here. I got some profit from that. That's not part of the outlook video, so I won't be going into much details about that. Let me just quickly run the explanation. It's simple. I was able to catch it because of this liquidity zones right here. I got this as an accumulation range. This is a liquidity zone, and this is another liquidity zone. You can see the ABCD swing to the downside, and you can also see a new ABCD swing to the downside right here, which makes this a liquidity zone. Let's mark that. So we add this right here, and we got the second one right here. The liquidity zone was taken out while running previous intra-week contract high and hitting a major EBITDA price right here. Everything is just in line for a sell, so I was able to catch the sell right there. And that's all the trades I was able to take. I'm so happy our first outlook video on the channel played out to the letter perfectly well. Everything played out as expected. That's not how it plays out every week. I'm sure you all know no system is perfect, although I win most of my trades, but not all of my trades. There are times that the market just decides to do what it wants to do. And that's going to be the end of this video. I hope you guys learned one or two things. If you have any question about any analysis or whatever I did in the video that is not clear, you can write it in the comment section. I try my best possible to answer as many as I can. And if you want to message me directly, you can message me on Instagram at Tom's Capital. I'll definitely respond to your questions. I'll see you guys on the next video. Happy trading and have a very good day.